But in the thick of earnings, even now, trying to digest a clutch of them, and Prime Focus came out with its numbers. The consolidated net sales have shown an uptick of about 5%, although the EBITDA has gone down by 24%. Vikas Rathee, CFO at Prime Focus, joins in right now. Vikas, your top line has shown a tepid growth, and the operating performance has dropped. What explains that?
Thank you very much for having me. I think the revenues continue to increase. On the EBITDA side, we've got some exceptional expenses that are coming in to impact that. As we continue the integration, we have just announced some time back the closure of the Singapore facilities. That is leading to another charge of about 80-odd crores. On a full-year perspective, last 12 months, we have reached 1,900 crores plus of top line and about 325 crores of EBITDA. And EBITDA is about 50% higher than what we had last year. So I think, most of our integration efforts are now behind us and looking forward to a very strong fiscal 17.
Right. So, what do you hope to do in terms of your EBITDA margins in the next few quarters? Do you hope to actually turn that to positive, or do you think there would continue to be pressure, but slight improvement coming in as the quarters go by?
No, I think we have continued to increase the margins. Obviously, you'll have one quarter here and there as we integrate these large global operations of the acquisitions we made. These things do take a little bit of time before everything stabilizes. I think we are at 17% now on the margin side. Next year, we are absolutely looking forward to 20+% operating EBITDA margins. And revenue growth continuing to be strong. We have a very strong order book starting this year, so we expect revenue growth of 15+% for FY17 and EBITDA margins getting into the 20+% range.
Tell me about your key projects that you're currently executing and what's in the pipeline for the next year or so.
Yeah, we've the whole Hollywood movie continues to be driven by sector continues driven by high VFX projects. We are currently working on Star Trek. We recently worked on Captain America, which was a huge billion-dollar box office. We did Batman, Superman. Currently, we are also working on The Mummy, Wonder Woman, Fast and Furious 8, the next Jason Bourne movie, Geostorm, and the next series of the Harry Potter, which is called The Fantastic Beasts. So very, very strong pipeline, great projects, both on the Hollywood and also in the domestic market.
Can you also take us through the debt on the books and what's the reduction roadmap?
We have ended March around 1,250-odd crores. That doesn't fully reflect the fact that we sold a non-core asset in overseas for about $20-odd million on the last day, frankly. That's about 130-odd crores. More than 100 crores of that has gone towards debt reduction, which you will see in the June quarter. We also announced the monetization of our stake in Digital Domain. That's going to be releasing close to $50 million of shares that we will look to monetize over the course of the year. So I think, between these non-core asset sales, I think we should, as well as the operating performance we expect for FY17, we expect to bring our debt load down by 25 to 30%, during FY17.
Okay, Mr. Rathee, we'll let you go on that. Thank you very much for taking time out and sharing those numbers with us as well as your business outlook. Thanks very much for taking the time out. Well, that's the management of Prime Focus. The stock is clearly trending lower today, losing about 4.5%. But let's focus in on the European markets as well and find out the kind of opening that we are seeing. And a bit of a positive opening there with FTSE up in trade by about 0.2%. DAX also